Get a quick update on the markets now. The JSE looking set to rally even with stage 6 load shedding on the go, which is expected to continue until Friday. Makwe Masilela is Chief Investment Officer and founder at Makwe Fund Managers, and he joins us now for a quick analysis of how the JSE is performing in early trade. Mr. Masilela, thank you once again for your time. Your quick assessment of how the local index and the rand are faring this morning, and I see Tencent is already behind the expected rally.
Yeah, it seems that markets, they disregarded the whole issue when it comes to load shedding. Maybe it's because we're used to bad news, but it's all because we've seen Japan's Q3 numbers being better than expected. Remember, this is the third largest economy, and also we're still benefiting from the expectations that the Chinese government or the economy is starting to opening up because they've relaxed most of those COVID-19 restrictions. So we're benefiting out of that. And the rand itself, we've seen that because of recession worries, we're seeing the dollar struggling a little bit. The rand is benefiting out of that. And also some of the commodity prices, your palladium, platinum, copper, they're up. And remember, the rand itself is a commodity currency, so it's also benefiting from higher commodity prices.
Let's look at the commodities now, and quite a lot of what we're seeing is a seesaw kind of action, much of it this year at least. Help us sum the performance this year, and as we look ahead, what kind of trajectory do you think we are going to end this year with?
It has not been a very good year, especially for prominent commodities, your silvers, your gold, stuff like that, all because we know these commodities, they are priced in dollars. So we've seen the dollar continuing to rise, being the king dollar, and expectations that there will be aggressive interest rate hikes. And going forward, people start to think that next year as well, we'll either see interest rates continuing to increase or they will stay high for a longer period of time. So that itself, it has been boosting the dollar, and that has been negative for commodity prices. But there are other commodities which did well, the likes of orange juice, not too bad, but natural gas as well. But mainly the prominent ones have been struggling, all because of a stronger dollar.
Yeah. Statistics South Africa scheduled to publish their latest manufacturing production and sales data for the month of October. Should we expect an uptick in line with what we saw in the GDP numbers, and that is that exciting number that surprised everyone, 1.6% growth of the overall economy?
I think that's a reasonable expectation, and we've seen the previous month they've gone up by almost 2.6%, and we expect the same drivers to continue to drive the latest numbers. That is the likes of your motor manufacturing, the likes of the parts thereof, and also food and beverages. And remember, this is a very important sector which accounts for almost 14% of our economy. So even if you look at the latest PMI numbers, they're not looking too shabby.
Let's then get into company news. Sanlam releasing a mixed bag of operational updates, with profits in its life businesses showing a marked recovery in the 10 months which ended on October as the COVID-19 related death claims dwindled. Talk us through the nuggets of their performance.
I think that was expected, but you look into their investment return. Unfortunately, it was hampered by volatile markets, high interest rates as well, and high inflation. Now, the problem here is, if you look into their short term as well, the fact that we've seen a high car theft, the likes of electric surge claims, the likes of the floods when it comes to KZN, that affected their short term insurance. Hence, their headline earnings per share are down 6%. But the guys, we know that consumers are struggling, so with consumer prices going up, there's a high probability that we can have more policies that has to lapse. But they acquired Alexander Forbes, their life book, and also Absa Investment Management. Hopefully that will help the earnings to improve going forward.
Yeah, let's conclude with York Timbers. And this week they outlined a plan to their shareholders for cash in a bid to show up its timber volumes, and by so doing invest in their manufacturing plants. Is that going to work? Talk us through that intended process.
Long term, it definitely is going to work, and we know that this is a company which is worth just over 700 million, looking to raise almost 250 million. The good thing is that they're using the money, number one, to increase their timber volumes and also to improve their manufacturing facilities. And more importantly, you look into the escarpment plantation, which is their key strategic asset. They're looking to increase the age of the trees from 20 to 23 years. That should work for them going forward. And we know they're competing with the likes of Sapi, and we know at some point they were affected by rainfall, strikes, stuff like that. But the guys are using the money not to pay down debt, because they've managed to pay down that debt, which was almost 515 million. Now we're sitting at almost 381 million. So they're using the money to make sure that they operate at full capacity, and that should be good for their earnings going forward.
Makwe Masilela, let me thank you very much for that market update. Chief Investment Officer and Founder at Makwe Fund Managers. All right.